I wanted to make a video to answer the question, what is the best stop loss to use in a portfolio of trading systems? You have the individual stop losses in each trading system, but if you trade all these strategies together at the same time, what is the best stop loss to use during the day if you start going through a extended losing streak? And so we have 7 S&P strategies, and some of these have been converted to 1-minute charts, and so they don't match the exact setup that we're using now. And we have 11 NASDAQ strategies, and you can see those here. In the S&P, you can see this one strategy right here has taken a trade today that we're trading the 5-minute version, but the 1-minute version is down today, so that reduces the profitability. And let's look at the combined equity curve. What is the combined equity curve on a 1-minute basis of all 18 strategies? And I have an indicator for that, and I've exported this indicator. This is a live indicator at the bottom being plotted. The blue represents the open equity on a closing 1-minute basis of all those strategies combined. It includes the 1-minute tick count trend version that we're not trading, so our results are slightly better than what you see here on the day. You can see right now 1220 on the day. I'm showing in live trading it's about 2,000 on the day so far right now. And what is the best stop loss? We have to export this. I've exported this data to a static file, and you can see that here. It's the closing 1-minute values exported to a file from those combined results. The last time I did this was yesterday around almost noontime Eastern time. And so you can see this represents the equity curve of our trading system. So we're going long each day right at the open and exiting at the close. That would represent trading our equity curve. And so what is the back-tested result for this? And I'm going to show you what the back-tested result for this is going back 28 months. Some of these strategies have different start times, and so if you go back 28 months in that set of strategies, some of them will start taking trades right away. Some of them will take a few months to start generating trades. So we'll just say the last couple of years is what this is for. The most recent trade, I guess, is September the 29th, 2020, and so you can see the equity curve here going back 28 months. 600 days of trade. Each day represents a trade. The largest losing trade represents 1 trading day. And so you're just getting in at the open, exiting at the close. No stop loss. Worst losing day 14,000. Worst drawdown 26,549. 4,027% is the net profit as a percentage of drawdown. So let's look at the easy language code so I can show you how this works. So we're going to test 2 different things here. We're going to test the best stop loss and if there's a good drawdown entry point. And so I've commented out the stop loss. I'm going to uncomment it. If the date is not equal to the date of 1, then buy 1 contract next bar at the market. So after the first minute, we're buying it, the equity curve, regardless of what else happens. Now we have a stop loss. We exit at 14.14. We exit next bar at the market. All our strategies are day trade, and they all exit by the open of the 16.15 bar. And so I'm going to verify this so it has a stop loss, and the results will change to the stop loss value that's already in the already set up. So we're going to adjust that. We're going to run the optimization tool just so we can see the results of all the stop losses quickly. And so this is you see this goes down from 4,000 to 32.34. This goes up from about 26,000 to 31,000. The worst case largest losing trade is 10,130. And so let's look at the stop loss. Let's edit the strategies. And now the stop loss is based on a 1-minute bar. So the close of the 1-minute bar. If the close of the 1-minute bar is less than the stop loss value, then it exits at the market. And so you can get additional losses since there can be quite a bit of movement on 1-minute bars. To get the highs and lows of these, I would have to go down to tick charts. And so tick charts isn't practical for the resources of in a PC environment. It would just crash the computer to trade this, to try to get the data for this many systems and backtest them down to the tick or even 1 second. And you can only go back 6 months. So practically speaking, the best we can do right now is 1 minute bars, one minute increments, which is better than end of day. And so the stop loss of 9,000 gives us a worst case losing trade of 10,180. And let's optimize this. Let's optimize this stop loss. These other inputs are not effective. They're in here from previous tests that are commented out, but the only one that's effective is the stop loss. We're just going to test it from 1,000 to 15,000, and 14,000 is the worst case losing day, so it shouldn't hit that. But 1,000 to 15,000 and in $1,000 increments. We're just going to take a quick look at the results for this test. I'm going to pause the video while this is running. So practically speaking, a $13,000 stop loss is the best stop loss to use. The worst case losing day before this was around 14,000, so not a big difference really. If you didn't have a stop loss, or if you used a $13,000 stop loss. The one benefit though of having this stop loss on an end of 1 minute basis is that you do know what your maximum daily risk is, whereas if you don't have that, then you can leave it open to a worst case scenario. So you're depending on each individual system stop losses instead of a portfolio stop loss. So if you use a $13,000 stop loss, you improve it slightly, and it's possible that in the future it could hit that $13,000 stop loss and recover if there's more volatility, if we have divergent volatility. So, but going back 28 months, once again, I have this portfolio back tests to 2011, 11 years, 12 years, but it would crash. It would crash this setup if you try to go back 12 years on this many charts on 1 minute bars and export this data. I haven't tried more than 28 months. I might be able to, go up to 3 or 4 years, I'm guessing, but definitely not able to go back 12 years, I'm pretty sure. So I will test the limits on that at some point, but this is what I'm doing right now in phases. And so you can see the worst case, the best stop loss to use in this stock index portfolio 18 would be a $13,000 stop loss per E-mini based on this optimization. Let's look at the optimization as well. Right click, data, strategy optimization report, and you can maximize that. I like to go over here to return on account. Return on accounts right here, and it highest to lowest, and it tends to go tends to get worse as you have it. The tighter your stop loss is, the worse the return, because you strangle the strategy too much. And so that's the stop loss. Now, is there a second question I want to answer in this video is there a drawdown entry point? That's the DDE input, and I'm going to change the code to do that. And we have to change that. Instead of data is equal to data of 1, we come in here and say if time is greater than, let's say, or equal to 931 and time is less than 1600, some of these strategies can get in up to 1610. So let's just say 1610, just to make sure we're thorough and comprehensive from a practical perspective. You might want to limit that, but we're not gonna limit it. We're just gonna make sure that we have the entire data set, and we're gonna exit at 1614, and entries to date is less than 1, and the drawdown entry and the closing equity on a 1 minute basis is less than DDE, negative DDE drawdown entry. Let's keep our stop loss of 13,000 in there, because anything beyond 2,000 would not have a stop loss, because the worst case losing day is 15,000, and if we wait for a $2,000 loss, a $13,000 stop loss would not get hit. So we can go with 13,000 for now and use the DDE studies, edit strategies, and we're going to come in here and say, let's just optimize this from, let's just say, let's just use $1,000 increments, 1,000 to 12,000 as the entry point by $1,000 increments, and see if there is a good drawdown entry point. And then we'll go back and look at the stop loss for that drawdown entry point as well. and maybe run the optimization not for implementation but just for discovery right now, just understanding the way this portfolio could potentially trade and the dynamics behind that. So running the optimization here while I'm talking, and it's going to update here shortly. I changed the input or in the optimization, but I did not verify it. So because I didn't verify it, it didn't take effect, and the results are the same because the code wasn't verified and updated. So to verify it, and I have to adjust this, you see the error there, if, and now I'm going to update it, and you'll see I can get rid of this, and I'm going to well, you see what happens. What's interesting is that I ran the optimization without it, and it still gave me a value of 8,000 even though it wasn't effective. So if we wait for an $8,000 drawdown, that only happens 38 times. So instead of 600 trading days, you only get 38 trading days. You get 85,000. Very low drawdown. So not very low stress, but not much profit either. So let's look at this. Let's optimize this. It has to be kind of tight. It can't just be too big, or you won't get many trades, and you'll miss a lot of run-ups. And so let's actually change this to 0, so we can see the 0 effect all the way to $12,000 drawdown. And you'll see how this works. I'm running the optimization now. I'm going to pause the video, and then we'll see the update. So after running the optimization, you see 0 is the top number. So let's look at the strategy optimization report now, and you'll see what I'm talking about. I like to go to return on account once again, right here, highest to lowest, and 0, and then 3,000, then 1,000, then 8,000, then 2,000, then 4,000. It's kind of scattered. Let's look at 3,000. That's interesting. That 3,000 would be second. So I'm going to double click on that, and that will update. If you double click on it, it should update it. I double clicked on it now. It's going to update the results. You see that 0 doesn't change it much. It's the same actually. So if you use 3,000, you go from 600 trading days to 240 trading days. You miss a lot of winners when you do that because you end up missing this day. You end up missing this day. You end up missing this day. Some of the biggest winners don't go against you that much from the start, just as in trading the market. If you wait for too big of a pullback on your limit orders, sometimes you miss. Same thing here. If you wait for, it works great some days, and so you can have recency bias. And for this month in particular, missing the first hour of trade would have been highly profitable. But it's recency bias. What does it do longer term? Is this just a 1 month cycle? There's a lot of 1 month cycles in the markets, and this is what I'm talking about. Let's look at the you miss it. So your worst case drawdown is really low, 13,617. Your largest losing day is only 10,000. Let's optimize. I want to point out in the easy language, all this green is commented out and it's not effective in the code. So let's optimize the stop loss again since we've done this. So let's optimize this and see 1,000 to 15,000 and 1,000 increments. So it went from 13,000 to 10,000, and so that makes sense because we're waiting for a $3,000 drawdown. The $10,000 would be $13,000 at the same point as the $13,000 stop loss would be if we use no drawdown entry. But the overall results don't change much. And let's once again optimize the drawdown entry in smaller increments. Let's look at it, say from 0 to 1,500 by $100 increments, and then run the optimization for that. We've learned from this that you can't have too big of a pullback or you miss way too many trades. And maybe there could be some other conditions that you would apply. I don't know off the top of my head. What would tell you when to wait for a drawdown and when not to? It's kind of a guess, and these cycles start to happen, and there's no way to predict the cycle that's the short-term cycle that's going to happen. And so you kind of just have to be consistent and simple in your approach. Otherwise, you get too biased, and then you're always jumping around. So here are the optimization results. I've sorted from highest to lowest. So we go over and look at the values and kind of what you think. If you wait for a $100 drawdown, it's a little better than the 0. But as you increase the amount that you want to wait for, then your results go down because you miss winners. And so you don't want to miss winners. Part of trading, they say don't get greedy, but you have to have your winners to make up for your losers. And so that's not being greedy, that's just the way it works. And so the results aren't as good. The max drawdown is larger. We could optimize the stop loss again, and then I'll end this video for now. I guess one of the things you could do is you could, on this setup, is you could wait for a winning streak if you've had a daily winning streak, and then you could maybe time an entry to wait for a drawdown a little better. We've done that on daily end of day analysis. It's not easy, but with intraday we might be able to set it up so that if you're winning if you're daily, if you hit an equity peak, say if you've hit an equity peak, then you wait for an intraday drawdown. We've looked at end of day drawdowns sometimes when we hit equity peaks or waiting to start a portfolio. But what about getting in on an intraday drawdown? Say you're in a $3,000 drawdown on an intraday basis, and you're waiting for a 10K drawdown to start, and you're down 7K intraday. You get into a 7K drawdown intraday, you're down 10K from your equity peak, and then it runs up and it closes up for the day. Now on an end of day basis, you're down 2K because you were down 3K, and then you're up 1K, so you're only down 2K on an end of day basis. But if you were able to get an intraday, that is 10K. So you could do that. You could discover that intraday possibly. So that's the only way we could maybe consider doing that. So let's look at these results, and then in the video for now, because it's turned into a long video. 23,000, about the same drawdown, about the same return on account. You have a $13,000 stop loss, which we had before, and wait for a $100 drawdown. So overall, what this tells me is that there's not a lot of room to improve this, but you could have a definitive intraday stop loss of 13,000. This needs to be verified. It takes a lot of work to verify this because I have to do it on the live charts and figure out a way to implement it on a live basis as well. And so this is not a complete setup, but a process, and I'm sharing the process with you in these videos. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.